Transition to housing. Existing home sales, we had those figures come in. They went up in October, which was interesting because we had 6 straight months of declines. Mortgage refinance applications have gone down big time and hit an 18-year low. And I thought we had very interesting comments from the National Association of Realtors today calling on the Fed to slow things down when it comes to rate hikes. So let's put it all together and talk about this environment with Bankrate senior economic analyst Mark Hamrick and National Housing Conference CEO David Dworkin. Thanks to both of you for joining us. Mark, let me take it with you on this Fed comment, which I did find interesting from the National Association of Realtors. It says, hey, Jerome Powell, slow things down. What do you think of that, and what would it do to the housing market if he did?
Well, I'd love to see a $1,000 check tucked inside my turkey tomorrow as well, but I wouldn't bet on that.
Right.
Of course, that's on the wish list for the housing industry, that this rise in both interest rates and home prices could somehow cool. But we did see in that existing home sales data the median sales price was not quite as hot as before. But whether it's the president sort of imploring Jerome Powell and company to cool it on rates, or others throughout the business sector, I think we're going to have to get into that December meeting and see what FOMC officials really think. There is a case for slowing or pausing, but I don't think that's the predominant case. Certainly not for the December meeting.
Right. Still a good chance, I think 70+%, that they raise rates in December. The question, David, is what do they do next year? Because then you look at, we add mortgage rates up and where they go, whether it's significantly above 5% or not. What do you expect rates to do next year?
Well, housing prices and markets do taper off, and I think it's when I'm landing an airplane, I don't want to pester the pilot about how he's doing it, because I want the landing to be soft, and I'm hoping that's what happens with this housing market. I think rates are probably going to continue to go up a little bit, and we're certainly seeing a flattening in the housing markets. But especially when you look year over year.
What about that
and when
landing,
you factor in
David?
population, it's much worse.
Okay, so you're saying the landing, though, can be smooth?
You want it as smooth as it can be, and I certainly think that's the Fed's aim. But we want to also be aware that there are other factors that are impacting housing affordability, and we have to pay attention to those as well.
All right, let's talk about some of those factors. Mark, what's the most important thing outside of interest rates that we should be watching here?
Well, obviously home prices. And so, if we start to see a lessening of this seemingly unrelenting 5% plus rise in home prices year over year that we've seen for a number of years now, that would help. But let's think about the strength of the macro economy, to the extent that one of the most often cited complaints about the economy in recent years has been the lack of more substantial wage gains. If we get better wage gains, that makes up for some of this housing affordability problem that we've squeezed ourselves into here.
Yeah, it's always a balance. We're starting to, I guess, David, see that a little bit, right? People are making a little bit more money.
That's right.
We were talking earlier in the hour about what we should be rooting for. I assume in your business, you're rooting for that, more of that, right?
We certainly want higher wage gains, but there's been a significant lack of supply, and that's one of the things that's been driving housing prices. So we have seen an increase in housing prices, but it's pretty inconsistent, and if it's driven by a lack of supply, then that's problematic, especially in the move-up market, where people are just getting out from underwater. And having 20% equity in your house is better than being underwater, but it's not enough to move up and buy something new, and that's what we've seen in the property markets.
As a final kind of point from both of you, and Mark, you can take this first. Where do you think the economy is in its cycle? Because this week we've had more and more conversations with people saying, all right, recession's a real possibility, end of 2019, beginning of 2020, or something like that. Should we even be talking about recession, or are you with Larry Kudlow in that we can't see it, it's so far away?
Well, Larry's a good man. I think you just have to look at sort of where a number of trend lines are pointed, to the extent that you begin to lose fiscal stimulus in 2020 from the tax legislation, and you have essentially, if the Fed stays on track, interest rates basically become penalizing at that point. So I think you have to circle 2020 and saying, that's a year to watch.
What do you think, David?
I think recessions happen, and we haven't ended the economic cycle. I think it's important that the Fed be allowed to bring us in for a soft landing so we can have a smooth takeoff and come out of whatever slump we're in and not crash.
When you say allowed, what do you mean?
Well, I think there's been a lot of challenges from the White House on Fed independence.
So you'd like to see that?
It's very important that we keep the pilot's door locked. Yeah, well, the president's entitled to have an opinion. I just don't want him to actually do anything with that opinion.
I get it. That's funny. Mark and David, thanks to both of you for coming on. We appreciate it. Have a happy Thanksgiving.